All right, guys, I am short on time. I want to get a very clear video out, but we're just going to have to really whip through this. So we're going to talk about the most important stuff. We can't talk about everything, but we'll start indexes. So SPY goes into new highs. You do get an exhaustion wick at all-time highs on the month, so they did sell to close at the end of the month. Notice previous months, they closed out at the highs. They didn't really take much profit. This month, they took some profit at the close. So we'll see what happens there. Nowhere near 2-2 down yet, but if it does go 2-2, changing the yearly continuity would be a problem because we know if you're below the yearly open, that's a sell. Kind of like in 22, kind of like the crash in COVID 20s. So very good to know. If we go to Qs, same deal. Notice you get some exhaustion wick at the close of the month, and now second month of the year. If that goes 2-2, that's a big problem because 2-2 up here is trying to go take all this stuff out. And your yearly open is here, 405.65. So if that changes, that's a big problem. If you go to Dow Jones, similarly, you do get a little bit of an exhaustion wick, nowhere near 2-2 down, but if it does and changes the yearly continuity, you got a big problem. If you go to IWM goes inside here. There's a lot of tries in here. So we'll start here on the higher time frame. Slight higher highs, slight lower lows. And if you remember, we had the inside month down puke. Then we had reversal, new continuity, reversal back up, rip it back to the highs. So now inside month, question becomes, is that going inside and up, which would reconfirm the rally we've had? Or does it go inside and down, which negates? And that would mean maybe the rest of the market's already puking, or this goes down first and then the rest follow. So we'll want to keep an eye on that equilibrium, see where it breaks. And the way we trade within those, or the way we want to monitor that is, well, you have the sub try here on the daily, these 3 bars outside of all these, and then you also have your bigger try, something like this. So when you go inside month, you're going to start the new try like so, and you can see they chopped it again, so started another one because they were inside month all the way through all this stuff, at least for the most part. What, right here, 1, 2, this is when the try started, and you can see chop. So if we can get outside of the big try here, then we can get the big move. And what we want to look at is things negating, because first month of the year went up. It's like, what's trying to potentially reverse? Because those would be the weakest stuff. If a reversal's coming, we'd be first ones in. And if it's not, anyone that bought to start the year and is getting stopped out, they're going to have to sell to close anyways, and then they'll just go and buy it back up after stopping those guys out. So if we go to Google, new all-time highs, exhaustion risk, rips it back. So what does this tell you? Well, anyone that was long when this was bright green looked great because it's making new highs. It's the best looking chart in the world. Now it's the worst looking chart in the world because we failed those highs. Now it's a shooter. It tells you those long guys are trapped. And you can see it goes all the way up, so you could get long all you wanted. Then on the earnings, boom, all of these guys instantly become a loser. So if they want to keep puking like they did on the gap down here, we'd want to see shooter month, and then maybe you come back through all this, and it looks just like the SPY. So 3-1-2 up, but it failed. So if that takes that out, maybe you go take these guys out down here for the outside year. So we'd want to know about that, and that tells me to look at like Meta as well. Not quite as weak. You can see closing much closer to the highs. So once again, still good, but if you take out 351.32 below that, that'd be a problem. Apple to start the year, much like Google, you can see they rip it back, but first of all, we have earnings. So earnings are going to come Thursday, which is the first day of the month, and that'll set the month in motion, I imagine. After that, what you'll see is it's a shooter, Momo shooter, but it was too weak to make new all-time highs. So weaker than even Google. So if it goes inside in red on the year, like so, it's trying to come back through this 3. It's just no signals here. So we'll have to watch the month, the quarter, see what shows up. Same with the week. And last time it was red like this, you see they dropped it just about $50. So maybe they do that again, or worse, 3-2 reversal. But we'll have to see. So far, it's doing nothing. If we go to then SMHs. So we said we want to watch the tech and the SMHs to continue, and they did to start the year. They do have that exhaustion wick. So similarly, if it takes out the yearly open, that would be a problem. That would change what we know to be true. If we go to NVIDIA, that's nowhere near doing that. So reconfirms what happened last year. 2 year up, boom, reconfirms here, boom. And the cool thing is, last year, everyone wanted to short this thing here, right? But that was a 2 year in force, so you couldn't. They had to get out. Now, when it comes to crashes and bubbles, am I going to say this is great, this is just, our economy is so good? It's like, no, this is a bubble, right? And you don't have to be trading a long time to know this probably isn't right. So if the yearly continuity changes across everything, that's when we know to like, hey, flip short everything. But until then, it's a bubble. Ride it up. It'll go even quicker the faster it goes. So if we go to then the SMCI, that's a bubble in it. So 222 quarters, still good. You got multiple months. So next month, the month after that. And while the market puked today, that went inside. So they're still strong. Same thing. It's like, how are you going to reverse this on the year? You're just not. And anyone that thought it was reversing any of these other years, they had no idea. So looks good. We'll keep watching that. If we go to AMD, same deal, except you do get some exhaustion. So once again, if you come back below the yearly open, that's a problem. 2 month, even worse problem. And if we start failing all-time highs, that'd be your first sign of like, hey, potentially chips not doing the best. At least AMD isn't. So we'll see what they want to do next month. First month they went up. What do they got for the second would be our question. Other things in the chips, you got things like QCOM, a little bit weaker. You can see they make slight higher highs to that and then pull back. So if they're going to do anything, we'd prefer them to keep going up, but the wick is coming back in. Potentially that yearly signal falls out of force, which would be an issue. So we'll see. We can also go to Marvel. That's a 2 year back up as well, but no longer in force. So it's nothing. You're actually failing that side of the range up here. So that doesn't look too good. And these are just going to be the smaller chips. You can also go to Intel. Notice too weak to make new highs on the year. So this will be the weakest chip we've got that's not going too down right now. You got inside month. So if they're going to start puking chip next month, these Intel, that'd be inside and down to start the month. That's an actionable signal to the downside. If chips are weak, I'd be watching that. If we go to TSM, that's a 312 year in force above 110.69. We'll just have to see if they keep that in force and start reconfirming, or if they go 2 month and then try and go outside year. So either of those scenarios we'll be watching. And what we can then start looking for is healthcares. So we knew this going into the new year as well. XLV and also XBI, so biotechs. Inside and up on the year, that's still good. Nowhere near taking that out. So as long as it's above 136.85, that looks fine. Nowhere near 2 month back down. Tells us AMGM, which is also a biotech. So how are you going to reverse that month? That's going to be pretty hard to do. On the year, 2 year hammer and force, you get all year. So if you watch the macro video and you're like, hey, healthcares, that looks like a buy because we're talking about it. Here's your 2 year right there, 289.04. Still good. So your shares, you just bump your stops above your entry and let it go. See what they can do. See what they do the second month. We can also then look at ISRG. That's going to be inside year and up to start the year, along with AMGN. So these two are also biotech. We can also look at LLY, which they've liked it since 18, so they still like it. See if that wants to keep going. They started the year double inside month and up, and they're just reconfirming all this. So no signals recently. Just have to see. If we go to MRK, that one's also going into the new highs on the year in the healthcares. Just bright green, no signals, nothing. If we go to VKTX, this is going to be more in the biotech stuff. That one's bright green to start the year. And we can go to Vera. So RevStrat year in force. How are you going to come back down to 2038? So want to see if that keeps going. And you can see real buyers. So it opens, it trades 22 to 25, 27 to 30. So we'll want to keep watching that. That's some real buying to start the year right there on the month. Very nice. And you got all year. You get short term or all time high exhaustion, but if they're strong, they'll keep going. We can also look at DYN inside and up on the year. Still has magnitude to 32, 32. And FYI, these are just going to be smaller market caps, so they're more news driven. Be careful. Uh, we got SRPT. I believe that one was a buyout. Never mind. And outside of that, we have a ABT. Could go 2 year back up on the hammer. And that's about it for the healthcares. In the consumers, so start the year consumers, they're not taking last year's highs, so they're too weak to do that. What we do see happening is this. Lululemon. Notice all-time highs, yearly exhausts. We open the new year, things change. So inside month and down here, that would tell us we're likely to go back to the other side of the tribe, which is down here, taking all this stuff out. So this will be very important to watch into the new year. We also know in the consumers, Tesla, RevStrat month 2, boom, they get killed. So now that they closed down there, that's good because they stayed down. Buyers didn't really show up as strong as they should have if they're going to rally back. So you're going to be a 2 down quarter, get a couple more months of that. And then the year is inside, but 2 down in green last year tells you what? It's like, well, they trended lower high here and lower low compared to the previous bar. And the previous bar also trended lower. So what are we in? Downtrend, 2 down, 2 down, inside in red trying to go 2 down to reconfirm the trend. So Tesla potentially going to 101.81. We'll have to see it, but it's bright red to start. How are you going to turn that around? Tells you look at RIVN as well. So Rivian not doing the hottest either. And what it seems like is like the luxury brands probably not doing the hottest. Other things in the retail, you got like Etsy, just right at the last year's lows. They went 322 to start the year. Maybe they keep going. And give me 1 second here. In the consumers, we also have things like Nike. They took the month down to start the year, but not taking last year's lows yet. If they do take that out, we'd look for a haircut towards $60. And before that goes in force, you also have a quarterly that could go in force here. So we can keep watching Nike. Starbucks, pretty crazy reaction to the earnings today. This is why we like gappers. Boom. Gap up, red right here. What's up 2 up in red? Potential 3 to take this out. They just ran out of time, but they're trying to take out 92.6. So pretty nice. And you'll see 2 up, 2 down, 60. And they really puked it in the morning. So if we go and take a look, 15ers. What we mentioned was 2 up in red 15er, you could short that. 2 15er, you could short that. Inside down, you could short that. And then there's a rev strat here as well. So pretty nice little puke in the morning, but looks good to try and keep going to the downside, potentially take all that stuff out. And what I would say is just really in the consumers, it looks like the consumer is not doing very good. So we're going to keep an eye on those and see, does that trend start to reconfirm on the next month or not? And Lulu is going to be the main one there because it moves so much. There's so much volatility in the technology sector that's hard to not focus on that. But what we can also then take a look at is the industrials. You'll see this Momo hammer in GD. You got a hammer Momo to the upside, and this is going to be industrials, aerospace, and defense. So that one's pretty strong. And with aerospace and defense, we have a war going on, so maybe that continues to do well, does better. It looks like it's doing better than the LMT, which is not doing too hot. NOC, it's doing better than that as well. So we'll see. We'll keep an eye on those as well with their inside years. But we also have in the financials, COF has taken last year's highs, 2.2's back up. We can see ALL, bright green, 3.2 on the year. A 3.2 is great to know because it shows aggression, and that's a hammer. So we want to see if that reconfirms, keeps going. We also see things like Citigroup, 2 year, mother bar issues. So we'll see. It's a bank I normally like to trade. We got a Bank of America. You're going to see it could 3.22 the year. So we'll keep an eye on the financials. They're really not doing too much, though. What we want to do is focus our attention to technologies, and we want to focus our attention to chips. And then we'll see Lulu next month. and the healthcares. Those are the three things that I want to focus on: technologies, chips, healthcares, Lulu included in there, and then we'll just keep an eye on the rest. So that is going to end it off here. I wanted to do a longer video, but I just don't have the time to go through all the industrials and do all that. But what you can do is you can go and take a look at our website here. We are having a little bit of code happening right now, so if you ever see something like this, just be aware that we're doing that. But if we go into the year or the month, going into next month, we want to know what's inside. So any inside month, that's something you'd want to look at. We got 228 of them. So let's say you just want the ones that move. You can do an ATR of like 3. It's like, all right, here's all the inside months with a higher ATR. Or if you wanted to do it just by price, $300, it's like, all right, here they are. So what we want to do is look for our inside months. We want to look for rev strats, which you're going to have to use tags to filter by. We want to look for 1.3s, and we also want to look and see what's outside month, because they aggressively bought that to go outside of the previous bar. So if we go here, you see you have 3 outside months, or not 3, 15 outside months, and a lot of them are to the downside here. So a lot of more aggression to the downside trying to reverse this stuff. If we just click the ticker, you can see it'll open the chart for you on TradingView. So if you went to like PDD, you see they took last year's highs and then they failed. So what's a 2-up that's failing? It's trying to go 3 and take this out down to 60.32. That's a problem. So if that keeps going 3.2 next month, that could keep puking. So you can look for that type of stuff. You can also look for your hammers and shooters. And what I suggest you do is when you go and filter, go by sector. So we can say communications, there's no outside months there. Cyclicals, PDD and DKNG did it. DKNG's up, PDD is down though. Defensive, nothing. Energy, we have a few in there. Financials, nothing. Real estate, 1. Healthcare, look at, you got 4. So what you can do is you can go through and say, do we have a concentration of signals in one sector? And that's what you want to be looking at. And if you're too lazy to do that, what you can do at the beginning of the month every day, you can just say, well, what monthly signal is in force? And right now we're going to have nothing there, so we'll just do the year. You say, what's in force? It's like, all right, we got 4 yearly signals in the communications in force. So that tells us we can go and look at spot. It's like, all right, inside and up here, as long as it stays above last year's highs, broadening formation can take you up here. If we go to Netflix, bright green to start the year, inside and up. As long as it stays like that, potentially all-time highs again. And we can just continue to go through that. Dash is a little weaker than the rest. TTWO is also a little weaker than the rest, but inside and up there, potentially you can take it back up there. So that's all we're doing. We're just looking for things in force, looking for things to confirm that or negate that. And if these all negate, they're going outside year. So we'll keep an eye on that. And I'll see you guys in the next update video going into likely the second week of the month.